Hello everyone. So I'm going to use this video to explain a very important app which is called the Currency Heatwave app. So this app helps you to identify many things in the market like currency strength, volume, volatility, and currency sentiment of the major currency pairs like GDP, Euro, JPY, NZD, CAD, etc. So over here you can see something like a clock like a pie chart, and you have some the pie chart is divided with arrows. You have your red arrow and your green arrow. So you can see that the pie chart is divided into eight, which is eight of the major currency pairs. We have AUD, NZD, CHF, USD, Euro, JPY, GDP, and CAD card. So what it basically means is that the the area, the currency that is occupying the larger area on the chart is the one that has the uh, stronger strength momentarily on the market right now. That means looking over here, you can see AUD, and you can see the green leg of the green hand of the pointer pointing towards AUD, and you can see that the section, the area that AUD is covering, is very large, like it's larger than the other seven currencies. So what is actually trying to tell is that AUD is stronger at the moment. The strength of AUD is stronger, and the strength of CHF, you can see the hand of the red arrow pointing towards the CHF. It means that AUD has higher strength, and AUD is stronger, and CHF is weaker. So that's how it is. So over time, this hand is going to this green and red hand is going to be rotating and moving over the currencies depending on the one that is stronger. So but for now you can see it's AUD and CHF. So we also have a multi-time frame ones where you could be able to see them on various time frames. Let me open it. So for multi-time frame, we have the 15 minutes time frame, 1 hour time frame, 4 hour, daily, weekly, and monthly time frame. So what it basically tells you is that it it shows you the time frame, then applying same knowledge the of the earlier one that I told you, that the anywhere that the green hand of the this thing is pointing to, that is a stronger currency, and anywhere that the red hand is pointing, that's the weaker currency. Like looking over here, you can see the green hand pointing towards CHF and the red hand pointing towards AUD. What does this mean? It means that on the 15 minutes time frame, AUD is very weak and CHF is the strongest market and AUD is the weakest. You can see it has changed to GDP right now. So it's going to be changing. So if you are trading on the 15 minutes time frame, you are like a day trader or scalper, something like that. So this basically where you will just be focusing on 1 hour, the 1 hour pie chart, and the 15 minutes. So you can see over here too on the 4 hours, you can see that the red hand is pointing towards USD. It means on the 4 hour time frame, USD is weak. On the higher time frame, USD is weak, but on the lower time frame over here, USD is not that weak, because you can see that the area it covers on the chart is large. But on higher time frame like 4 hour and 4 hour, 1 hour, daily, and even weekly time frame, USD is weak. But on the 15 minutes time frame, you can see it is expanding. So that is just basically what it shows you. It shows you the stronger currencies compared to the weaker currency, and the stronger currencies you have them occupying the larger area of the pie chart, and the strongest currency you have the green hand of the pointer pointing towards it, and the weakest currency you have the red hand pointing towards it. Like over here you have JPY. JPY and the red pointer is pointing towards it, and you can see that the area that JPY is taking is very, very small. So that's about the multi-time frame. So the thing is that it does not mean that if you see that CHF is strong here, is the strongest market, and GDP is the weak, it does not mean that it means that you just go and buy CHF, like long CHF or short GDP. It does not mean that way. This app is just for confirmation. After doing your analysis, you can just come to this app and confirm. So once your analysis tallies with this app, then it gives you another confirmation that yes, this your trade is going to play out. So don't just depend on this app for your trades. Don't just see that okay, GDP is strong, AUD is weak, it means I'm going to long GDP AUD. No, that's not how it happens. So the other thing I'm going to talk about is the strength meter. So over here we have the strength meter. You can see it ranges from 1 to 9. It ranges from 1 to 9, and you can see from 1 to 9, that is 1, 2, 3, 4. Then 5 is the middle over here. 9 is when it is at 9, you know it is super, very, very, very strong. When it is at 1 or less than 1, you know it is very, very weak. So what you do now is that, looking over at euro now, you can see it is around 3.71. So it's just telling you that the market is a little bit weak, but not very weak. It is basically in almost average. So from 4 to 6 is your average zone. Anything below 4 is weak. From 4 to 6 is your average zone. Or you can just take it that from 4 to 6 is your average zone. From 1 to 3 is your weak zone. From 7 to 9 is your strong zone. So you can just see, like over here, looking at this AUD, you have the pointer pointing to 6. It means that it is in a strong zone. Remember I said from 6. Okay, it is in a neutral zone but slightly strong. So you can consider from 6 to 9 as strong, then from 4 to 1 as weak. You can consider it that way. It's not, but then very weak is anything from 3 to 1. Very weak is 1. Anything between 1 and 2 is very weak. Anything between 3 to 5. 3 to 5 is a little bit weak to average. So that's how it just basically is. Just know that 5 is your middle. Once it crosses above 5 to like 6, you know that it is getting strong. Once it crosses below 5 to 4, you know it's getting weak. So how do you use this for your trading? How do you use this strength page for your trading? For example, if the variation is very high, like you have one currency is trading at 6 and you have another one trading at 2. If you check these two currency pairs, it's going to, on the chart, you are going to notice that it is a trendy market. Like it is a trendy market. So that's what you are going to notice. If you pair a larger one, maybe you are pairing the one that is the value is 2 to the one that the value is like maybe 7 or 8. You will notice on your chart, once you open the chart, you are going to see that it is a trending market, either uptrend or downtrend. But once the range between them is not that large, maybe like checking at this card JPY, you can see it's 4.43 and 5.71. Once the range is not big like that, maybe the range is within 1 or 2, it's going to be a consolidating market, maybe like a ranging market. So that's how you pair them. If you want to trade the trending markets at the moment, you look for the ones that has high variation. Like maybe you pair the one with a very low value and the one with a high value. Maybe the one with 2 and the one with 6 or and the one with 8 or 7. That's how you get your trending market. But for consolidating market, you want it to be very tight. Like looking over card JPY, you can see card is at 4.43 and JPY is at 5.57. So you can see that the range, the variation over there is not big at all. So that's how you pair them to use it. So looking over at all these 8 currency pairs, which one is the weakest? All you just have to do is to look down and you can see that CHF over here is the weakest because it is at 2.86. Then looking over again, which one is the strongest? Just look. You can see that AUD over here is the strongest. So what can you do with these two pairs, the strongest and the weakest and the weakest? You can pair them together, go to the charts, and you will notice that you have a trending market. So after doing your analysis, you can decide that maybe the trend is oversold or overbought. You can decide to long or short. But this app is basically just telling you that, just recommending to you what type of pairs you can be trading. So you can see that the variation is very high. AUD is 6.144 and CHF is 2.86. The variation is very high. It's like almost 3, a difference of 3. Then you can pair them together and have your ranging, your trending market. Then for ranging markets, I will look towards something that is close. You can see that Euro is 3.57, GBP is 3.29. If you pair these two together, you are going to get a ranging market. And you know that ranging market always most likely breaks out. So if you are a breakout trader, you should consider trading the ones that have closer pairs. For example, you are looking at your chart, you see a chart pattern and you want to trade the breakout, either towards the upside or downside. You want to trade the one, you want to pair the ones that have a close value, because that one is telling you that there is consolidation. I think that trading the ones with close value is good, and also trading the ones with high variation of value is also good, because you have options to trade. Do you want to trade the trend? You go for the high variation ones. Do you want to trade the breakout? You go for the low variation one. So that's it about this page here, this trend. So I think this is the most important page. Actually, this is the most important page. This trend page is the most important page, second to this multi-time frames over here. So these are the most important ones. Then you can also look at volumes. I don't really pay attention to all these ones. You can see volumes. You can see over here the one with the red arrow on top of it has the lowest value volume, and the one with the blue arrow on top of it has the highest volume. You can go to volatility. Volatility tells you the rate, as in the rate of buying and selling activity in the market. And you can see over here the one with the green one. You can see the one, basically the one, it changes, it interchanges. The one with green on top of it is more volatile. You can see that looking over here, you can see that these three pairs over here, JPY, CAD, and CHF, are volatile. And checking over NZD, USD, and Euro, they are less volatile market. So if you want to trade the breakouts, you can actually pair the volatile market with the non-volatile market, trade the breakout, something like that. But you should focus on this currency strength meter. So the sentiment just tells you the market sentiments, ratio of buyer to sellers. You can see over here, Euro is basically telling you that 45.3% are shorting of the market are shorting Euro, and 54.3% are longing Euro. So how do you use this? For example, you want to trade when you want to look for longing opportunities when there is when you notice that the amount of people that are longing the market are very low. That's when you should be looking to long, when there's abnormality in the ratio between buyers and sellers. If the ratio of buyers to sellers is very low, you can look for buying opportunities. If the ratio is high, you can look for selling opportunities. So that's how you use it. Like I said, this is where you want to focus the currency strength meter. So that's it about this video.